I'm George Alfredas.
And I'm Dave Mathews, and this is What's Next Wall Street.
This is a show all about winning trades.
That's right. We want to help you learn about trading in a fun, entertaining, and most importantly, a useful way.
So what we're going to do is talk about all the hot, new, trending products and services that you not only want to use, but also possibly invest in.
We'll also cover the fundamentals of those companies to make you an informed trader and make it easier to target investment potential. Plus, we'll share our thoughts on where the charts and indicators say a particular stock is going.
So all this info can help you create a tailored trade plan and help you stay up to speed on what's next Wall Street, what's next on Wall Street, so that all you have to do is stack your gains.
But this show doesn't happen without you. You can email us at OptionsPlayers.com or hit us up on social media at What's Next Wall Street with your questions. We can also direct you to the instructors and experts over at Options Players who dig into the trading fundamentals.
That's it. Oh, by the way, you can also see this show, right? You're watching it right now, but you can hear this. You can watch the show, watch this episode on YouTube, or you can also
tune in on Spotify,
Apple, wherever you get your podcast. Yeah.
So inflation matched its highest rate in 13 years when it hit 5.4% in September compared to the same month 1 year ago.
Yeah.
Meanwhile, Treasury Secretary Janet Yellen says the $1 trillion bipartisan infrastructure and social spending packages won't accelerate inflation because the spending will be spread over a 10-year period.
Okay.
Yellen said both bills will be huge boosts to the U.S. economy as they will make the economy more productive and help Americans get back to work. She noted the coronavirus pandemic is still causing problems in the labor market, but says it's a good thing to see wages rising around the country. I'm actually seeing this firsthand with my restaurant technology project, where operators cannot hire enough workers to stay open during the hours that restaurants once did before the pandemic. Now, Yellen also urged Democrats and Republicans to get together on raising the debt ceiling and warned it would be a complete disaster if the U.S. defaulted. The infrastructure bill also includes $73 billion for electric grid and power infrastructure to meet Biden's goal of 80% clean electricity and 50% less carbon emissions by the year 2030.
Okay.
It has $65 billion slated for broadband investments, not just for expanding into rural areas, but also rebating service for low-income families, which I love, especially with Zoom requirements for all age groups these days.
Yeah.
$15 billion of this goes to electric vehicles, which probably means more tax rebates. And remember, our current power grid won't handle everyone in your block with electric cars charging at home. Oh, tack on $11 billion for road safety. But aren't these future cars supposed to drive themselves? $135 billion goes towards agriculture conservation programs to reduce carbon emissions. Did you know that 15% of greenhouse gases come from burping cows and livestock?
Oh, wow. I kind of did know that.
That's a lot of burping cows, which incidentally can be reduced by feeding them seaweed along with their grass diet. Who knew? Finally, some of this money is going into preventing wildfires, which then leads to massive erosion after flooding, something my friends in California are seeing currently. Finally, my favorite is $37 billion towards improving cybersecurity because we rely on these little digital devices in our everyday lives. And China and Russian hackers do not sleep.
That's right. Now, the big points of these for businesses are the tax changes. So corporate tax rates are going to increase from 21% to 26.5% for those with income over $5 million. Now, small businesses with income below $400,000 would drop to 18%. But those of you entrepreneurs with revenue in the middle, you get to keep the same rate at 21%. Ooh. Yeah.
So today's pro tip is a reminder that will save you greatly if you adhere to it every day before those markets close. In fact, just slap a sticky note on your monitor with this one so you never forget.
Forget.
Options are meant to be sold, not held.
Held.
Thanks for the dramatic echo.
You're welcome.
This is something that they remind us over at Options Players all the time because literally 20 to 30% of all options expire as worthless.
Yeah.
In fact, options were originally created as insurance for long positions. Since then, Folks have learned how to use them as a wealth building vehicle because you can get into the stock play by leveraging options with less cash outlay in your trading account. But you must always remember the challenges of the Greeks and this tip. Catch up on previous episodes of What's Next Wall Street to find out what we mean by challenges of the Greeks.
Okay, this is my favorite part of the show, one of them anyway. This is where we get to hear from you. You can always hit us up on social media at What's Next Wall Street or email us at WNW@OptionsPlayers.com. And here's the thing. If you want to know it, somebody else does too. So there are no stupid questions, only stupid answers. Just kidding. Okay, here we go. Jim C. from Anchorage, Alaska asks, what is the best time to trade during a regular session? Great question. Okay, you didn't ask this, but first, let's find out actually when is the worst time to trade, and then we'll get to the good stuff. So the worst time to take an entry is always at market open. At that time, the spreads are wide and premiums are jacked up, so you're more or less gambling with odds severely stacked against you. On the other hand, like during lunchtime hours, you're going to generally notice lower volume, which could present more attractive entry opportunities to consider for the afternoon increase of volume and premiums. So try to paper trade at these times and see how that works out, so you can get a better feel for what tends to happen, so you can establish a sound trade plan.
All right. Well, that second email comes from Eric in Georgetown. Eric asks, how much money is on the sidelines now? And will this money move back into the market now that the taper situation is better known? Well, that sounds like a great question for Greg Krause, lead instructor at OptionsPlayers.com. Hey, Greg, welcome to the show.
Well, the tapering and rate hikes are not the same. They do go hand in hand. What I mean is tapering means to basically pull away from something, and what they're pulling away from is the quantitative easing. And quantitative, which we're just going to call QE from now on, is just the purchases of securities and bonds, right? The Fed is putting money into the market, which lowers bond rates. Now, interest rates, which most people out there are really thinking about, they're thinking about mortgage rates. That's not really what the federal funds rate is, but the federal fund rate influences it. So first off, you got to understand those are all three different things, but they do kind of go hand in hand. So let me answer that question. Tapering, when they start to ease off, likely they're going to stop buying bonds, all right, and securities from the companies such as Apple or whatever, okay? And then what that actually is going to do is make the rates those bonds go for a little bit higher, right? So now their cost of capital is going to get more expensive, which they're not going to get as good of a discounted cash flow evaluation. So the stock prices could go down, okay, for that purpose. Now then, after you slowly start to pull back, tapering, that's going to make the stock market not as good as an investment, okay? It's going to make bonds seem a safer play, so money moves into bonds. Then that raises the yield, so on and so on and so on. So there's a little cat and mouse game there, and it's a little bit more complicated. But as you taper off and the government stops putting money out there, you're probably going to see them raise the federal funds rate next year if they go by their current plan, which I don't want to pull politics in it, but Democrats never raise the rates. And although the Fed is supposed to be independent, we all know they're not, because they do exactly whatever the president wants. So it's going to be very hard to see them raise rates if the market actually starts to taper off its all-time highs. So you also said something about money on the sidelines. There is no money on the sidelines. The only place to put your money in right now is stocks, real estate, and assets. You're not putting them in the bond markets. You're definitely not leaving them in a checking account. With inflation, you're not holding cash. It's in an asset. Now, you might be, but I promise financial advisors and rich people are not. That's not where their cash is. So really, it's cash be moving out of the market and doing its cyclic rotation into another asset, crypto, for inflation or bonds or something like that. I know, long answer. Sorry, Dave, Georgia.
All right, thanks, Greg. Hey, those of you watching or listening, if you've got questions, we've got answers, or at least we'll hit up Greg, who does have answers. You can find us at What's Next Wall Street at all the socials, or email us at WNW@OptionsPlayers.com with your questions. Okay, Georgia, it's time for a walk down memory lane.
Okay.
To remember, how did we get here?
Okay.
So, do you remember all the screeching and screaming that your computer did back when you had to dial into the internet?
Oh my gosh, yes.
So I brought one for you.
Okay, I got
That-
one. Ah,
There's the noise.
listen.
Oh,
Oh my gosh. Unbelievable. I haven't heard that in a long time. What was all that noise anyway? What was that?
so that was the modem, which is these things we have in our hands, and that's a modulator, demodulator. That's what modem stands for. And it was blasting different frequencies into your home phone line. Remember when we had those?
Yeah.
So this was in order to find out the speed that the line was capable of. And it wasn't just your phone line, but also the phone line at the other end of the connection. And if you've ever globetrotted like me, you'd have to carry a bunch of these adapters for both power and the different phone lines for each country. And you'd have to have an internet service provider that had dial-up lines for the country you wanted to connect in. So check this out. This is all of my adapters that I used to carry around. And you've got, of course, like the power adapter, and then you had to have the telephone adapter.
Oh,
and
the struggle is so real
Oh,
for you, Mr.
right?
Thick
And look at
Password
these-
guy.
these
I
are-
remember these. You had to, and I never could figure them out.
Yeah,
right?
and look at this, like what kind of a connector is this one here?
What is this?
So, look on that paper on the left. There's a.
Oh, is this my
Yeah,
is this my how-to
Yeah,
sheet?
there's
This
a
is-
diagram. So you'd have this like 25 different adapters, and then you'd have your sheet.
Oh, it
of
tells
which
me, look,
ones
this
did-
is Madagascar, this is for Mali,
Yeah.
this is for Morocco, this is for Nigeria. Wow, Japan, that tells you what is what.
So if you're going to 3 or 4 countries, you'd get your like 4 or 5 adapters that you would need, and then you'd
Wow.
put them in a little bag, and then you'd go on a little trip with your satchel of adapters.
Oh my
God.
gosh, this is
You can see I'm cleaning my house out now for a move, and
This is crazy.
I just, now I can throw these away.
couldn't you sell these on the internet for like $1 gazillion, right?
No, this is a relic of the industry. Just like these modem cards have no use because no one's dialing up anymore. You don't really need those adapters.
Yeah,
anymore.
but you could sell this. Like if you were doing a movie, like give me all this. I'm gonna keep it somewhere, put it in the attic, because you never know.
Well, you don't need them anymore because then our technology went to PCM-CIA.
Wait, what?
Yeah, Personal Computer Memory Card International Association. And these little cards were the next generation modems. And then those modems, which I love these have a little X jack that you could go out.
Wow.
But these started as memory card interfaces, but then they quickly morphed into peripherals. And then Ethernet adapters came out like this one. This one was so cool because you could take a hotel Ethernet line and plug it right in there with a cable, though.
Oh, wow.
It was so annoying.
Not wireless.
But in 1996, these wireless adapters debuted. Now check this one out from
Oh, look at
BreezeCom.
that.
This is before Wi-Fi. This was a special adapter. And I think these antennas were inspired by the little X jack, the jack that would pop out from the telephone modem
okay.
here. But it was Apple that first put Wi-Fi in their candy-colored MacBook computers. And they used the term airport card. And this was a standard called 802.11b. And that's the precursor to what we're using today, that everything has built-in Wi-Fi. Now it's much faster, of course. But one more thing about this. Apple, in their first base station modems, they had a telephone modem inside, so it could do all the screeching of dial-up as well. But then you'd have to share that modem connection with everyone in your home. And if you wanted high-speed connectivity back then, you were lucky if you had a cable modem always online. Typically
Right.
you didn't. But you'd have this thing. This is an ISDN modem, and this got a whopping 128 kilobytes per second. These things were so slow, but they used the old analog telephone wires with a digital connection on top of them. And ISDN, isn't that cool?
ISD what? I don't even know I give up with your acronyms. What?
So that acronym came to be known as "It Still Does Nothing" because it was still pretty slow.
Okay, got it.
But you were looking at 200 or more megabits per second today with cable modems, and even higher, like gigabit speeds for fiber. And now internet's always on,
Always.
right? You pick up your phone and it's there. So a lot of what we had to do in the past to get online, we just take for granted now. So you kids are lucky.
You kids are lucky. Okay. All right. Well, hopefully this global pandemic is going to be in our rearview window soon enough. In the meantime, consumers are already exhibiting that sentiment because we are out and about. I mean, have you tried to get reservations lately? Don't even think about asking for patio seating. It is not going to happen. So people want to look good, now that they're out and about. But during the pandemic, some brands soared because we had to learn how to at home, like how to makeovers. We had to, screen time shot up because we needed to know how to do stuff ourselves, our nails, how to apply Zoom makeup, how to give yourself a glycolic peel, how to color and cut your own hair. I tried henna. That didn't really work out for me. Although some people choose to embrace the gray, others opted for what we called quarantine hair,
Yeah, and I walked around looking like a surfer guy for a while. Wait, I actually decided to keep that homeless chic look because I can.
Yeah, you still kind of look like a surfer guy, actually. Meanwhile, I spent way more money on hair products than I typically do when I go to the salon. So I bought tons more makeup and skincare as well because, beauty makes us feel good. And if I was going to wear sweatpants on Zoom, I was going to have my hair did, my makeup beat, and my nails on. You follow me?
No.
I didn't think so. So out of necessity, I, like everybody else in the world, started doing these things myself. And after lots of trial and error, I found some products not only worth using, but also worth investing in. One product I fell in love with is Oplex. Now, it actually happened after that mishap with henna, but we'll move on. Because Oplex kind of helps repair and protect those of us who color more than we should. Oplex IPO'd in September and is valued at $15 billion. I like Ulta a lot too because, hello, there's an Ulta inside Target now. I am so here for getting Oreos and concealer in the same place at the same time, all right? I need that kind of time saver in my life. But moving on. Coty is also on my watch list as well, thanks to it girl brands like Aveda, MAC, La Mer, and others. Now, a lot of beauty companies saw a decline in their lipstick revenue because nobody can see your lipstick under your mask, right? However, skincare products, especially those with natural and organic ingredients, have seen a huge boost. In fact, sources say skincare is the fastest growing area in the beauty industry, with sales expected to hit $180 billion by 2025. And makeup and skincare isn't just for women anymore, right, Dave? Okay.
Yeah.
I know you use tons of sunscreen. I'm talking about sunscreen. You love to boat, and I know you got to use sunscreen, right?
That's true. Look, skin is the single largest organ on your
Right.
body. And unlike you, I crack if I don't moisturize. So bring on that good smelling Kiehl's, which, by the way, is owned by the French publicly traded company L'Oreal.
That's right.
That can be bought under the U.S. over-the-counter ticker and is trading around $90 a share.
What? Okay, so L'Oreal is definitely a buy for me, and so is Shiseido. They paid over $800 million for a couple of years ago for one of my favorite skincare lines, Drunk Elephant, which is, by the way, female-founded and clean. Shiseido is also home to a lot of other popular brands like NARS, La Mer-Cier, Bare Minerals, and others. But you know what? Don't listen to me. I only invest in products I use, or vice versa. Greg Krause, lead instructor at OptionsPlayers.com, still here. You might be a little more unbiased than myself. What do you think, Greg? You like our list of stocks to watch? Is beauty a buy?
Yes and no. I mean, I know I say that a lot, but the L'Oreal is actually probably one of the better ones in the sector. Almost everything in that sector is. Almost everything in the market is overvalued, as we can assume. When I did did a few different versions of cash flow, discounted cash flow analysis on it, tried to actually get what his future earnings would be based upon what his expected growth rate is. And it's actually quite high, although I believe last year was 28% growth. That's probably a little excessive. I did about 10 years at 8% and then dropped it down to 4% for a terminal. And it is overpriced, but the thing is everything is overpriced. So while it might be overpriced about 30 something percent, most companies are overpriced by 100. So, I mean, what do you do? So yes, it's probably one of the better ones to actually pick in the market. We're pretty much not going to find anything that's undervalued in today's market. So good pick.
All right, cool. I'm so proud of myself.
Well done. Hey, thanks again, Greg over at Options Players. That's Mr. Kraus to you, Georgia.
Yeah, I just Greg to
you.
me.
We appreciate you being with us here today.
Right. So remember, if you got questions, we can try to help you answer them, and we'd love to hear from you. So email us at WNWS@OptionsPlayers.com, or you can hit us up on social media at What's Next Wall Street.
You can, of course, watch episodes of What's Next Wall Street on the Options Players YouTube page, or if you listen on Spotify, Apple Podcasts, or wherever you get your podcast. Hey, I'm Dave Mathews.
Hey, I'm Georgia Alfredas, and we will see you next time on What's Next Wall Street.
Bye-bye.